Opendoor Technologies management team provided some big news for investors as it reported on the progress of the business, the latest critical insights that investors need to know about the company before they make a decision about buying or selling the stock. So I'm going to provide those details for you in this video and discuss what it could mean for Opendoor Technologies stock investors. Of course, the price volatility of this stock has exploded in the last week or so on a day that the stock price increased by over 100% during trading during one day. And so a lot of investor attention is not going to this business, which makes evaluating the fundamentals of the business even that much more important. So I'm going to share more details for you in this video here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So given the company's business model is very asset intensive, meaning they need a lot of capital to execute on the business model because they're buying and selling homes, and homes are extremely expensive in the United States. You can argue they're more expensive than they need to be, but that's a whole nother discussion. The company needs to pay homeowners to purchase their homes and hold those assets on their balance sheet until they can sell those homes to new customers. And in the process of buying and selling those homes, Opendoor Technologies hopes to make a profit. And so you need a lot of capital to execute on that business model because homes in the US are $500,000, upwards of several $1,000,000. And those are not even very fancy homes, and they can still be priced at close to $2 million depending on the location. So it's good news to hear that the company had $7.9 billion in borrowing capacity, of which they've used up $2.3 billion. So they still have 5 or more billion in borrowing capacity should they want to exercise that borrowing capacity, meaning if they should see an opportunity or if homeowners are now increasingly willing to sell their homes at lower prices that could entail better profit margins for Opendoor, it has the opportunity, it has the capability to capitalize on that. But unfortunately, the housing market is going in the opposite direction. The management team saying that the housing market has further deteriorated since the beginning of the year. Persistently high mortgage rates continue to suppress buyer demand, and we are seeing more sellers pull out of their contracts than we would normally expect. And the housing market is one of the first areas we're starting to see the slowdown in macroeconomic growth. The tariffs that were implemented earlier this year are starting to slow down economic growth. And of course, if you're not as optimistic about your income prospects, if you're not as optimistic about your business, you're not going to go out and purchase a home. Simultaneously, you're also not going to try to sell your home in that same environment either, because you don't know if you can buy another home at a similar price, or you don't know if the job you're accepting in that new location will be as permanent as your current job. So you're not as willing to switch jobs, switch careers, change cities, etc. And the housing market is starting to feel that paralysis right now. The management team says that their outlook assumes that these headwinds will continue to impact their performance in the near term. So they're forecasting revenue of $1.45 billion in the next quarter, the second quarter of 2025. And as you may have already heard, the company is forecasting profitability on an adjusted EBITDA basis. They're forecasting between 10 and 20 million in adjusted EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization. This would be a $20 million year-over-year improvement at the midpoint of their guidance. So in the same quarter last year, they were negative $5 million in adjusted EBITDA in Q2 2024. And this year, they're forecasting a midpoint of $15 million in adjusted EBITDA. So this will mark, if they actually achieve this target, it'll mark a return to positive quarterly adjusted EBITDA for the first time in 3 years. So great news to be sure for Opendoor Technology stock investors. And I don't think this has a little to do with the rally in the share price this week. Of course, on Monday, at one point, the shares were up over 110%. Of course, I recommended this stock as a buy in February. Before this rally of late, I had identified this as an undervalued stock back in February, and viewers of my channel were privy to that news way back in February. Now, since the volatility, the stock price has fluctuated so wildly up and down that it's difficult to make that kind of undervaluation recommendation on the stock. At one point yesterday, I was recording a video on this stock where during the video, the price actually crashed by more than 50% just during the short time that I was recording the video. So the volatility has absolutely spiked in this company. And I'm comparing this to the meme stock frenzy days back in 2020, 2021, when AMC stock and GameStop stock experienced this kind of volatility and this kind of price action. The big difference here, though, is this is, in my opinion, a viable business, a business that has tailwind supporting growth for the long term. Whereas with AMC and GameStop, those are businesses that were in declines. They were operating business models that were unlikely to become consumer favorites anymore, right? The People are not buying physical video games as much anymore. It's digital copies that have the tailwind. And then people are not going to movie theaters as much anymore. People prefer to stream content instead. And those two major trends are never going to turn around. And that's why I say that they were not viable business models in the long term. Those two were just solely based on the meme stock frenzy catapulting the stocks to higher prices. Whereas with Opendoor Technologies, it's a viable business with improving profitability and an industry that's ripe for innovation, right? Nobody can say that the housing market in the United States is efficient, right? There's a lot of inefficiencies in the market, a lot of inconveniences in the market, and it's ripe. Consumers on both sides of that equation, buyers and sellers, are open to new companies solving some of the problems in the housing market because it's such a market that's primed for innovation. It hasn't had any innovation in so long, and the process is outdated, slow moving, very expensive. The fees are extremely high. And so buyers and sellers are looking for new companies to come in and help out the industry innovate forward. Now, this document I'm looking at is from Opendoor Technologies. It's their first quarter 2025 earnings call transcript. And this highlighted document I have made available for all my channel members. And you can join my channel for less than $5 a month. There's a link in the description. You can see all of the benefits you get in addition to this for joining my channel. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.